Hey traders, welcome back to another video. In this video, let me show you a way through which you can determine the flip of supply and demand zones in the market, and you'll be able to get crazy trades like this with very simple technique that you'll be able to learn throughout this video. So without any further ado, let's get started. So first of all, from this drawing, what you can see is there's the formation of these higher highs and higher lows in the market. And these higher highs and higher lows represent the break of structures, because here, if we go into a little bit detail, you can see there's the formation of this higher high. And if we mark this level as our structure, then this structure gets broken and a next higher high is formed in the next wave. So this is a break of structure. And then again, there's a break of structure, break of structure. So in supply and demand trading flip zones, at one of the breaks of structures where market or buyers are losing their momentum, you'll see the formation of a demand zone. So what market will do after breaking this last structure, it will give this impulsive move in the downward direction towards this demand zone, as we'll see in the example. And after, from this demand zone, market will give a little pullback. Now, here is what's important, because at this pullback, we want to look for supply zones. So again, first there's the formation of break of structures and break of structures, and then at the break of structure where there is the formation of a demand zone at the higher low, you should be looking for the formation of a pullback and then a supply zone in that pullback here, somewhere here around this area. So after the formation of this supply zone, market will break this higher low, and here we can successfully say that there is the formation of a change of character. So previously there was only break of structure, but with the formation of this next lower low, there is the change of character, and market will break this demand zone that will be forming here with a very big bodied candle that will show that there is a great number of sellers in the market around this area. And this area here, this flip zone, represents the institutional activity. So institutions will put their pending sell orders, and after the formation of this change of character, market will go back, pick those orders, and then move impulsively in the downward direction. So we can target the beginning of our pattern as our take profit level, because you can also find any key level here, for example, a support zone or a demand zone at this level as well, where the structure started to form. So now let's go ahead and talk about this with an example. So right now on the chart, you can see I'm on GBP JPY pair at 4 hours time frame. And on this chart, you can see the formation of this type of structure where there's the formation of higher highs and higher lows in the market. So here we can draw a demand zone, that is drop base rally demand zone, and we can draw this demand zone at the high and low of these candles. So with this demand zone, formation of this demand zone, we can also see the, let me just turn this into green because we want to represent this as our demand zone. So with the formation of this demand zone, we can see the formation of these higher highs in the market and higher lows here as well. So with every formation of higher high and higher low, there is a break of structure happening. For example, here, the market is breaking this higher high and forming a next higher high. Similarly, we can also see the market forming this higher high and breaking this higher high and forming another higher high. And with these consecutive higher highs, there is also formation of these higher lows, which shows the market is in bullish trend. So at the beginning of this structure, we can see the formation of this demand zone, and also around here at this area, we can also see the formation of another demand zone, that is a drop based rally demand zone. So we can go ahead and mark out this demand zone on this base region. And after the formation of this demand zone, we can see market breaks this structure, makes another higher high, and then market goes back towards this demand zone. After this demand zone, as we saw in the example, there is this little pullback. Now, this pullback is really important because we want to look for the formation of a supply zone around this area, which we can see forming here. So there is a formation of this rally based off supply zone, and after the formation of this supply zone, we can see market changes the character, because here we can see the trend changing from bullish to bearish with the formation of this very big bodied bearish candle. And after changing the character, after making this lower low, after the formation of this higher low, we can see the formation of this lower low, and this, after making this, market goes back to this supply zone to pick the pending orders, because this supply zone represents the institutional activity in the market. So after taking the orders from here, you can see market rallying downward with this very big impulsive downward or bearish candle. So from here, this is a very good trading example of how you can use the supply and demand trading flip zone in your favor to go ahead and to trade profitably. And for the target, after the formation of the supply zone, we would be trading along the institutions by putting our pending sell orders at this supply zone. So our orders would get picked here, and for target, we can target this demand zone to which market rallies downward to pick the demand in this area here at the start of this structure. So if we go ahead and check the risk to our ratio of this trading example, we can see the risk to our ratio of this trade is really good. So the risk to our ratio of this trade is almost 6, which is very good. So this is how you can use the supply and demand trading flip zones. This is a trading example for a supply zone, supply flip zone. And now let's go ahead and take a look at another example where we see the formation of a demand flip zone. So here you can see the formation of these lower highs and lower lows in the market. And with these formation, with this type of formation, there is the breakout structure happening at every lower low. For example, here we can see this lower low gets broken with the formation of this very impulsive bearish candle, and again there's a breakout structure happening here. And with these consecutive lower highs and lower lows, the market is in bearish direction for now. And also around this area here, we can see the formation of supply zone. Now you might not be able to right away see the supply zone forming here, but because I've been trading supply zone for a while, I can clearly see the formation of supply zone. For example, if I mark this area and go to a lower time frame, so let me just go ahead and mark this area, and if I go to lower time frame, then we will definitely be able to see the formation of a supply zone around that area. So let me just go ahead and scroll back there. So here you can see the formation of this rally base drop supply zone. So let me just go ahead and draw this supply zone. And now we can go back to our time frame that was 4 hour, and again continue to trade what we were trading. So here you can see the formation of this supply zone around this area. So in the similar manner that we studied earlier in our theory, there's the formation of these lower highs, lower lows, there's the formation of these breakout structures, and after at this last breakout structure, we can see the market rallying back to this zone here, and after picking the supply, there is this pullback. Now again, this pullback is very important because there's a formation of demand zone in this pullback, and we will be trading this demand zone. So we can go ahead and mark out this demand zone here, and after changing the character, because there is a formation of this lower high, and here is the formation of a higher high, so there is a change of character happening here. And let me just go ahead and change this demand zone color to green. So after the formation of this change of character, we can see market coming downward and picking the demand from this area. So this is a trading example of a demand flip zone. So here, after picking the demand zone orders, we can see the market rallying in the upward direction. Now you know where to put your entry and where to put your stop loss, but where should you take profit? So in order to exit the trade, what you can do is zoom out, and in the overall direction of the trend, you can see the formation of these clear higher highs and higher lows in the market. For example, there's formation of this higher high
this higher high and another higher high here. So we can target the most recent higher high as our take profit for this demand zone. So we'll be putting our take profit around this area here. And then here we can go ahead and exit the trade once the market hits this level. So I hope you like this video. If you have any questions, please comment down below. I would love to answer them. Also, don't forget to like, share, and subscribe. See you in the next video.